industry leader. This is Marsha Mayfield, the owner and the founder and the CEO of Financial Services Plus, where I help beauty industry leaders make and maintain multiple six figures. I want to just jump in here really quick. I'm actually here traveling for business, and I wanted to do a quick video to share with you guys about traveling. Okay, this is good, so I want you to take notes. I'm normally very to the point, and I try to make sure that I share information that is relatable to your industry, relatable to the things that you currently need, especially in the upcoming tax year. So I want to talk about, as I said earlier, travel, okay? When you're filing your tax return, you have two options to report your travel. You can do option one, which is report travel as far as how much you paid on your travel costs. You know, you purchase fuel at $40, or you purchase a flight, you know, at $200. So you have just a direct cost when it relates to when you're using travel, okay? Or your rental car, etc. That's just a direct cost for travel. Of course, keep your receipts and your documentation, right? The second option is mileage. Now, I wanted to share with you about mileage because a lot of people are very afraid or intimidated to use mileage because it does require a lot more information, and the IRS really does take a close look at the information when you use mileage. So don't be afraid to use mileage on your tax return, because like I said, you have the two options. But if you choose to use mileage, it's very important that you keep a log of all your information, all your stops from the time you leave your home to your destination. Just a side note now, you cannot use a tax deduction for traveling from your home to your salon. Now, if you leave your salon and you go to a training or class, if you leave your salon and go into purchase products, etc., at that point you can use mileage or travel for that, but not from your house, from home, to your salon. Unfortunately, you don't get a credit for that. But back to the matter at hand. So if you're using mileage, it's very important. First of all, I'm gonna share with you guys also how much you get for mileage, okay? And then your tax professional should, look at the two. That's what I do with my clients. I look to see what is the best benefit for my client to use mileage or just using travel, okay? So like I said, you have those options, but you have to choose the option that is best for you in your current situation. Everyone's situation is different. Now, if you're using mileage, and I do have these numbers here, you get 56 cents for business mileage. Okay, that's a deduction for you. If it's medical mileage, this is for if you're itemizing your return for medical mileage, meaning going back and forth to the doctor for you, your spouse, or your dependents, you get 16 cents per mileage. So keep up that information, okay? If you're going to make a charitable donation, Salvation Army, or you're going to a benefit or contribution and you're traveling, you get 14 cents for that mileage, okay? So guys, but this is the most important thing that I want to share with you. You must keep a log. It's very important, as I stated earlier, and I keep re-emphasizing because it's important. If you're ever audited, they will come at you extremely hard for mileage, but with the proper documentation, you'll be fine. So meaning just have this, a notebook, notepad, write down I left home on this date, I traveled this many miles. Be sure to check your monitor on your vehicle often to make notes, documentations, and things that you can use for mileage is your automobile, of course, your truck, and your boat. And someone may say, well, why would I use a boat? Well, you got some of my clients may live on an island, that does live on an island actually, and they may have to travel to another island to receive service, so you track that mileage as well. So again, your automobile, your trucks, and any boats for your mileage. I do hope this has helped you and will support you with your tax planning, guys. Remember the importance of tax planning. You tax plan to prevent any audits as possible, as many audits as possible, to eliminate the risk of audits. You do tax planning to eliminate to reduce your high tax liabilities. So it's very, very important that you begin to do tax planning, because if you're a multiple six-figure earner, guys, you don't want to wait until it's time to actually file your taxes and then you receive this large tax bill and be like, oh my God, what happened? We could try to prevent that by doing some tax planning and implement some different things that we can put in place, begin to monitor throughout the year prior to tax season to set you up for success, okay? Again, this is Marsha Mayfield, and I do hope that this information has been very helpful and supportive to you and your business. Thank you.